to the Trading Market Technicals morning call video for Monday, December the 9th. Big day on Friday. Dow Jones up 198 points, Nasdaq up 29, S&P up 20, and the Russell up almost 9 points. All due to the better than expected non-farm payroll, the reduction in the unemployment rate, and of course we had some manufacturing numbers come out as well. That just fueled fire for risk on, buying S&P, buying everything across the board, pushing the markets back up to the 1800 area in the ES. I'll show that to you in the chart segment. Wild day. The only thing is something like that is when you get a big move up like that, markets tend to gap up at the opening, have a small little run. So the day trading is far and few in between. But if you were long going into Friday, you had a good day yesterday. On Friday. But what I'm thinking here going into the next couple of weeks, I think it's going to be interesting. I do think that the mutual fund investor, the money manager, large funds are probably not going to disrupt what's going on now in the marketplace. So I think a pullback in December is probably going to be unlikely. The trend is up, as we all know, and we want to follow the trend. It would have been nice to have a nice little pullback going into the middle of the December, but that's not happening. I'm sure there'll be a day or two of price movement lower. There is tax selling, as you know, at the end of the month, so keep an eye on that. But other than that, I think you try to look for stocks that are moving higher, that have actually pulled back. Nothing wrong with them. Maybe a profit taking and now into some key support areas, and that's what you really want to be looking to buy. It would not be looking to short the market. Shorting the market, it would be detrimental to the trading account. It's not worth it. Stay on the side. Unless you're shorting something that's relative weakness, and I mean extreme weakness, even the weak stocks are catching some sort of a bid. So the euphoria is on about buying stocks. I do think that there's going to be a bigger move lower in 2014. I mean, this is totally insanity for me. And I'm a trend trader, so I follow stocks and I follow what's going on with the market. I don't look to fight it. I'm always always try to be at least on the same side of the trend. So the thing for me, what gets scary is that everybody now, everybody and everything, meaning computers, is buying stocks, and you just can't go vertical straight up without a decent pullback or retracement. Now that pullback could lead into something more. Again, we don't know, but I think 2014, the first 3 to 6 months, is going to be very, very interesting to say the least. Seasonality, as you all know, we are at a strongest month of the year, December. We had, I would say 48 out of 60 Decembers we were up, and aside from that, we pushed to actually some new highs here. So interesting. So I want to show you what our targets are going to be. But I would definitely, if you are long, I would not be looking to add positions to your account. I'd be looking for any type of pullback. If you're looking to get long, this is not the place to do it. So you might want to just step aside and wait to get some sort of retracement to start entering the marketplace. Okay. Anyway, let's go into the indicators here. There haven't been much help, but you could see, and this is why I say I'm cautious here. I'm very cautious actually, and I'm not looking to take on any type of risk other than knowing your defined risk in the overnight session. Holding anything overnight via options is something that I would be looking to do. But other than that, I would not be holding any outright stocks or anything like that, only because you could wake up in the market be down 30 handles, and that is totally positively true that could happen. Okay, so we get the New York Stock Exchange, new highs, new lows. We had a huge move up, and again, it seems like this is stuck in the mud here. Nothing is happening. Not a good sign. Okay, now that doesn't mean that price still can't go higher. It's just telling me that this is definitely a warning sign. Bullish percent SPX, still on a sell signal, and this to me is a surprise. I was looking at this on Saturday morning, thinking that this would actually pop up, but it did not. So this is still on a sell signal. We have the new highs, new lows I just showed you. We have the tick. Tick now is above the zero line, but should be well above 600, but it's not, making lower lows and lower highs, as you can see. Again, not a good sign. Stocks above the 50-day moving average. This went back on a buy signal, but we're really at these lofty levels where markets are known to sell off. We did not get that in November, as you can see, and we are in December now, but we are making lower lows and lower highs as well while we get that buy signal. To me, it's again a word of caution here. Okay, the New York Stock Exchange new low. I thought this was going to be down here, and apparently it's not. So, as you can see, guys, stocks are not really moving. Yes, there are a handful of sectors that are moving, which is good. It's actually a good sign when you have sector rotation, money going into one sector to another, and not physically coming out of the market. That's a very good sign that we can continue this rally at least to the end of the year, obviously. But to me, this is also a red flag that we're not selling. If new lows should be making new lows in this indicator, right? But we're not. We're actually hovering above here. So this tells me that the stocks aren't really moving, and some of them are making new lows. So we are just sitting here. Okay, so this is interesting stuff here. Let's take a look at. I want to take a look at the couple of indicators here, a couple of sectors. Here's a semiconductor. Actually did very well. Intel really followed the lead on Friday. This is actually again a good sign for the bulls. We have the semiconductor index here making new highs. I like this, taking out this consolidation area. We have the BKX. The bank's actually starting to move. We had that little bit of a pullback on the 20. As you can see, this little, I don't know if you can catch that. There we go. Right up in here. This is actually acting well. I like the banks going into the new year with rising interest rates. I think the bank's going to have a phenomenal year. Speaking of that, let's take a look at the XLF. This is the bullish percent financials. Actually turned up higher again. We were flatlined for a few days. Now we're turned up. So I think this XLF, I think you can buy some of these banks even going into the end of the year. Okay, let's take a look at the VIX. VIX had that black candle. I said a possible reversal. Be careful. And sure enough, look what happened. We actually exploded to the downside. No volatility, no fear in the markets, total complacency. And again, that's the contrarian in me that says use caution. Okay, we're back here at these lows again. So we've been literally at these lows pretty much all of 2013, with aside from a few little blips in the market here. But anyway, use caution here, guys. I don't suspect anything big's going to happen between now and the end of the year. But we do have a couple of solid weeks of trading, so something really to think about here, okay? All right, let's take a look at WTI. I like the crude oil trade. I've always liked it. I've been talking about it for months. I liked it down here with the 20-day lows. Now we're at the 20-day moving average. Now, we did get a death cross here, the 50 and the 200-day, which is a very bearish formation on the moving averages. However, it's starting to curl back up again here. I think I'd like to see a bull flag into here, making that higher low here from this low, and then that's something I would be buying with both hands, okay? With your stop, very identifiable, right up and down in here, easy to manage, and then that's where I'd be looking for crude oil. Now, gold, to me, is a different story. As you all know, gold is in a bear market, right? We got the 8 and the 20, the 50 and the 200. We had that 8 and 20 cross here. We had the cross here, and we failed. We are now in a bear market in gold. Here's the monthly chart of gold, way back from 2001. We bear flag. We're breaking that bear flag here. I think you're going to get a big flush. If everybody's looking to buy risk assets, no reason to be buying gold. So I think you're going to get a little bit of a flush here in gold. Let's take a look at the weekly chart. You can see what I'm talking about. I like the gold trade. If we can bounce back up to the 1280 area, it just has not let me in this trade. And I'm not looking to short gold here. You got a double bottom here from here. This could be a nice little M formation. You can see here that M pattern. Maybe we just stay right here and we start to move higher. But I'm liking gold. I'm looking for a spot to get in somewhere around the 1280, 1300 area, if we can even get up that far. But I do like gold as still gold, a short trade. And here's just the daily chart. As you can see, you're really getting nowhere. We popped up one day and then we just clearly reversed. Okay, let's go right into the charts. Now, here is the monthly chart, guys. This is the monthly extension coming in at 1836. And I think between now and the end of the year, it's very attainable. I think we can get there. But I do think once we get to that area, I think you got to use extreme caution, and I think that the markets would be ready to sell off. I mean, this is a monthly extension, so I would use caution here. But I think that's going to be the target, the 1836, which would be the 216 extension on the daily chart, close to it anyway, 1829-ish area. We're up about two handles right now in the early morning pre-market session. But again, no selling, right? We had the big move up, and pretty much I think you're going to digest the move today. Would be pretty relatively quiet. But again, there's always some opportunity. You just got to keep looking for it. But again, we're right up in this area here, 1829, 1832. That's going to be probably the target. We're at two extensions already. We hit two extensions. This is absolutely crazy. I've never seen in 24 years doing this, that's for sure. Okay, ES. First target we mentioned down here would be 1797. We blew right by it. And now that's going to be support. So 1797 is going to need to break on a closing basis. Here's the hourly chart, and as you can see here, we have bullish configuration on all of the moving averages. Lots of support below. It's going to take a lot of time to eat up a lot of this. Okay, now let's get right into the ETFs. Spiders, as you can see here, monthly chart. We just opened the month up, but we are above this trend line. And we are now chugging along here. Let's see if we can close the end of the month higher than the previous month. That would also be another outside month, excuse me. Weekly chart. Okay, sitting right up in here. We were lower. We closed up higher again. And again, guys, you can see we're grossly overbought here. But again, that does not, as you can see, it's not a sell signal. Daily chart. S&P broke right up, broke higher. But we remember, we do have some overhead resistance that we need to deal with in a lot of these sectors. So, and especially the downtrend line coming in from 2012 lows, the November 2012 lows of last year. So that's something to contend with. Now, do we break higher and continue? That's yet to be seen. But at least we're going. The target would be 182.87 in the spiders. Diamonds. Big day, big move in the Dow Jones. Excuse me. Here is the two trend lines that we're looking at here, and we're just sitting right on this other trend line from the 2012 lows, November 2012 lows. Had a nice little bull flag. We broke back out of it. Now let's see if this has legs to at least challenge the highs. But as you can see here, we have yet to get to the highs, and that's going to be the next hurdle to get over. It's going to be those highs. Same thing here with the transports. Okay, a little bit more room. We have a little room to run, but again, you know, 1 or 2 more days of gains, then it's going to really need to either consolidate, build up some energy, and bust out higher, or begin to roll. And that's something that obviously we all don't know what's going to happen, but interesting developments, to say the least. Okay, Russell, same thing. As you can see here, we have a little bit of room up, but we're going to be contending with some previous resistance and previous highs. Okay, XLF. Looking really good. As you can see here, we're rolling up, down, higher low from the previous low, up, down, higher low from the previous low. Definitely bullish price action. I like the XLF here. Now, this is nice because this is starting to unwind its overbought reading. So even if you come down to the 50 midline and then start to roll back up in stochastics and MACDs start to break back higher again, this would be a good opportunity to start looking to get into some of the banks. And as you can see here, Goldman Sachs had a big move lower, and I said it's 164-ish, 165, right up in here. I would even like to see it hit the 50-day moving average to move back half of this and then look to start buying, getting it into a trade in Goldman Sachs. Same thing with J.P. Morgan. As you can see, J.P. Morgan pop back up again, but again, nice little movement to the downside. We have this gap area of support and holding up pretty well. So this would, you could actually start entering J.P. Morgan right up in here, and then start adding as it gets into the 50-day moving average. You don't want to get below the 50-day moving average, obviously, otherwise there's a deeper downside correction in the cards here. Lastly is the IGN. As you can see, still on this bearish pattern, but it looks like this may fail. Networking picking up, semiconductors picking up, so definitely positive for the market. Apple roll back over. Really normal here, guys. Look for the next pullback to consolidate, and then look for a buy-in on Apple, at least between now and the end of the year. And of course, lastly is the Qs. Okay. All right, guys. Have a great day. Hope everybody enjoyed the weekend, and we have full week of trading. Next 2 weeks is going to be very interesting. Hopefully, let's see what happens. Light on the calendar, so it's going to be a lot of technicals involved. So we'll see what happens going into this week. Have a great day, and we'll speak to you tomorrow. Take care.